When it comes to investing, there are a lot of options to choose from. One of the most common investment debates is between stocks and investment property. Both have their own risks and rewards, but which is the safer option? In this video, we'll be discussing the pros and cons of each to help you make the best decision for your portfolio. Let's look at what stocks are. Stocks are shares in a company that can be bought and sold on the open market. When you buy stocks, you become part owner of that company, and you make money from them in two ways. First are dividends. This is when companies pay out a portion of their profits to shareholders. So if you hold stock in a company that pays dividends, you'll receive money from them periodically. The other way to make money from stocks is when their price goes up. Then you sell your stock at a higher price than what you bought it for, and you'll have made a profit. Now let's take a look at what real estate investing is. A real estate investment property is simply any property that you buy with the intention of renting out or selling at a profit at a later time. It can be anything from a single family home to an apartment building, a commercial property, or even a piece of land. Now that we know what stocks and real estate investment properties are, let's take a look at the pros and cons of each. Let's start with the pros. One of the biggest benefits of stocks is that they offer investment portfolio diversification. When you invest in stocks, you're essentially investing in a large number of companies, which reduces your risk if one of them goes bankrupt. Stocks are also very liquid, meaning you can sell them at any time for the current market price. That's not the case with many other types of investments. Also, when compared to other types of investments, stocks have the potential for the highest returns. And this is because their price goes up significantly if the company does well. For cons, the biggest downside to stocks is that, as with any investments, returns are not guaranteed. Stocks are also very volatile, meaning their price can go up and down a lot. And that can be a good thing or a bad thing, depending on your perspective and your tolerance for risk. While stocks have the potential for high returns, they also have limited upside. And this means that the potential for making a lot of money is not as high as maybe some other kinds of investments are. Now let's take a look at the pros and cons of investing in a real estate property. One of the biggest benefits of buying an investment property is you can rent it out, and that generates consistent cash flow. You receive a steady stream of income from rent payments, which can be very helpful as supplementary income or income for retirement. Unlike stocks, real estate properties are tangible. You can see them and touch them, and that makes them more comprehensible, since a stock is only a piece of paper in the drawer. And that physical aspect is very important to some investors. Another advantage of investment properties is that they have the potential for long-term returns. While stocks may go up and down in price, real estate values have a tendency to consistently rise over time. One of the downsides of buying an investment property is that it requires more initial capital than stocks. This can be a barrier to entry for some people. Another downside of a real estate investment property is that it involves more work than stocks. You have to have a tenant, collect rent payments, deal with any repairs or maintenance that may come up. And finally, investing in real estate is less liquid than stocks, and this means you can't sell easily, and you might have to take a loss if you need to sell quickly. So let's recap. Stocks are shares in a company that can be bought and sold on the open market. Investors make money with stocks through dividends and price appreciation. A real estate investment is any property that you buy with the intention of renting out or selling for a profit at a later time. Some pros of stocks are diversification, liquidity, and the potential for high returns. Some cons are risk, volatility, and limited upside. For real estate, the pros are consistent cash flow. It's a very tangible asset, and it has the potential for long-term returns. Its cons are higher initial investment, more work that's required, and it's a less liquid asset.
As a real estate investor, it used to take me 3 months of research to find a property worth investing in. Then I found Mashvisor, a platform that helps investors make confident decisions within minutes. Start your free trial at mashvisor.com.
So, which is the better option? Investing in the stock market or investing in the real estate market? There's no easy way to answer this question, and it really depends on various factors, including your age, your risk tolerance, your personal preference, long-term investment goals, and more. If you're young and you have a high risk tolerance, stocks may be a great option for you. They offer the potential for high returns, and at that stage in your life, you can afford to take the risk of losing some of your money, or even all of it. Investing in a real estate property may be a better option for you if you're closer to retirement. It generates consistent cash flow, which will be helpful once you no longer are receiving a regular salary, and it has the potential for long-term returns. Plus, it's a tangible asset, which many will appreciate. I, of course, am personally pro real estate. I like that I can use a tool like Mashvisor to help me do the initial research and give me the complex data to rely on before making a large purchase. But I'm more comfortable in this world, and I like the idea of buying a building, adding value to it, providing a home for tenants where they can make their own family and raise their kids. It just seems more fulfilling to me than a stock portfolio would. As mentioned, however, it's also a lot more work. With stocks, you can buy them online and not really think about them again until they hopefully gain value on your behalf. When you are ready to buy stocks, you have a few choices of who you can go to for advice. You can go to a financial planner or an investment advisor, even a stockbroker, of course. A financial planner can help you create a plan for your money and provide advice on specific investments. An investment advisor can help you choose the best investment for your needs and offer you a more comprehensive selection of assets than a stockbroker maybe can. Meanwhile, a stockbroker buys and sells stocks for their clients every day, but they may not provide advice on other types of investments. It is vital to get advice from qualified professionals when investing in real estate. A real estate agent will help you find the right property and guide you through purchasing. A lawyer will help you with the legal aspects of the purchase, and a financial advisor can help you here also by helping you understand the financial implications of buying the property. It's essential to work with professionals who have the expertise and experience to help you make the best decisions for your situation. And on top of that, Mashvisor can contribute as well and provide you with real estate data and analytics to help you make informed investment decisions. Thanks for watching. If you like this content, please like, subscribe, and hit the bell icon. We post videos on real estate and real estate investing every Monday and Thursday. Also, to learn more about Mashvisor and how we help beginning investors make smart investment decisions, check out the site by clicking on the links in the description.